name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead. Now, I've prattled on and on about how great a comfort it has been that the market has kept within the breach, but still not yet broken and seemingly still valid May to October 2020 bullish shift pitchfork, originally drawn well over a year ago. To recap some of the more recent significant actions, late September last year saw a halt to a decline, stopped dead by the lower tine, currently at 22.48, of the same broken May to October 2020 bullish shift pitchfork. The market then rose up to the upper tine, currently at 25.88, in late October, where it was also stopped dead and turned back down. By now, the market seems to be ping-ponging between the upper tine and the lower tine. As recently in early February this year, the market once again attacked the lower tine, breaking it by getting stopped dead once again at the same levels as back in December last year, and thus creating a double bottom, which has already been achieved on target. Since early February, we have seen a gradual rise that slowly approached October 2021 high at 24.52. And then last Friday, the market broke up over the high, with a combined bullish engulfing pattern and bullish opening white Mariposa. This was the ignition to what subsequently happened, a huge move up today, up through the upper tine and peaking just over the February 2018 high at 26.84. However, this huge move up may not be all what it seems, as prices have dropped heavily from this peak, back below the upper tine and not too far away from the highs of yesterday and the opening levels realistically of today. Thus, it'd be very interesting to see what today's close and the next few days' action will be, as if prices below yesterday's high of closed below yesterday's high of 25.26. And this is only a guide, you understand. But if they do, then today's pattern could be one of the largest shooting star patterns, type 1 bearish, that I've ever seen. It all depends on tonight's close and the next few days' action. Finally, I note the one lagging indicator that is happening today. We have a golden cross of the rising short medium moving average, currently at 23.19, up over the rising medium moving average, currently 23.18. LME 3-month tin. I'm sorry if you've heard this first bit before, but it is so necessary, I'm afraid. So here goes, once again. Now, I've been repeating this bit again and again now for a year, and it is this: the overall bullish incentive is still alive, well and strong here. Now, this might sound trite, but it's important to know that the original move up was back within the January to March 2021 bullish shift pitchfork that started way back in March last year. We have seen recently is a break up and over the upper tine, currently at 44.660 in late February. That was a concerted move higher, created by yet another fresh attack on the upside with a new, more acute, January-based bullish shift pitchfork. This had previously seen good work between the lower tine, currently at 45.100, and the middle tine, currently 46.920, as the market was corralled slowly higher. Then, two consecutive bullish white Mariposos on Thursday and Friday last week pushed prices to yet an even higher level, in between the middle tine and the upper tine now, currently 48.740. Yesterday saw a breach of both the upper and middle tines, and the day ended as an indecisive spinning top, though with a new all-time high. Yet today prices have moved higher, still easily through the upper tine and the base of the action so far on the middle tine. But, and it is an important but things have not gone all one way. As though prices have made a new all-time high at 51,000, we may be on for a possible tempering move or a bullish move, depending where we close tonight. You see, we could look at today's action as a shooting star pattern type 1 bearish, if, for example, we close once again below the upper tine. Or we could look at it as a possible bullish engulfing pattern if prices only close over 47,750. Something that they can currently do. This makes the next few days all the more interesting. Now, I just wish to finish on the words that I've echoed for weeks and months even. I'm sure you as well believe that no market can head in one direction all of the time, forever. Though this metal is giving a pretty good impression of such a market. That is why we have seen in the past some major corrections. Yet it's important to note that despite these corrections, the market in all its pullbacks down has never ever managed to break the same bullish incentive that's been seen here since March. The evidence for this could be seen by how this market stayed within, if only just on occasions, the same January to March 2021 bullish shift pitchfork. The issue now is that prices are exiting up and out of this pitchfork that has served so well at a more acute angle. The question now is whether this more acute bullish shift pitchfork is sustainable. Well, is it? This brings me once again to my final point, the same final point which I've repeated now from previous commentaries many times. It is this, and I quote, "It can be hellish to rely on only one pattern because it can be hellish when it breaks." End of quote. So, caution. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZD Tofpik and ADM Investor Services International Limited. And here comes the final bit.